Here's a stat that might shock you. Most Americans have less than $1,000 saved for retirement. But there's one account type that could literally change that reality for you. It's called a Roth IRA, and honestly, it might be the single best decision you make for your financial future. So stick around because today, we're breaking down exactly what it is, how it works, and whether you should open one today. Let's start with the basics. A Roth IRA is a retirement savings account. That's it. It's a special bucket the government gives you permission to use, and if you follow the rules, you get massive tax benefits. Think of it like this. Imagine a piggy bank, but every dollar that grows inside it, you never pay taxes on those gains. That's essentially what a Roth IRA is. Now, you might be wondering what makes it different from a regular savings account or a traditional IRA. Here's the key difference, and this is really important. With a regular savings account, you earn interest, but you pay taxes on that interest every single year. With a traditional IRA, you get a tax deduction when you put money in, but you pay taxes when you take it out in retirement. A Roth IRA? You pay taxes up front when you contribute, but then everything grows completely tax-free, and you never pay taxes on withdrawals. That's the magic. Let's put some actual numbers on this. Say you're 25 years old and you invest $7,000 a year into a Roth IRA until you're 65. Assuming an average 7% annual return, which is reasonable for a diversified investment portfolio, you'll end up with roughly $1.4 million. And here's the incredible part. You don't owe a single dollar in taxes on any of those gains. Not when you take it out at 65, not ever. Compare that to a regular taxable investment account where you'd be paying taxes on dividends and capital gains along the way. It's a massive difference. Now let's talk about who can actually open one. The IRS has income limits, which honestly is where most people get confused. For 2025, if you're filing taxes as a single person, you can contribute the full amount if you make less than about $146,000 a year. If you make more than $161,000, you can't contribute at all. There's a phase-out range in between. If you're married filing jointly, those numbers go up to roughly $230,000 and $240,000. The key thing to understand is these limits exist, but for most people starting out, you're probably fine. So how much can you actually put in? For 2025, the contribution limit is $7,000 per year if you're under 50. If you're 50 or older, you get a catch-up contribution of an extra $1,000, so $8,000 total. That might not sound like a lot, but remember, that money grows tax-free forever. That's compounding on steroids. Here's another huge advantage: flexibility. With a traditional IRA, you're locked in until age 59 and a half. If you take money out before that, you pay a 10% penalty plus taxes. With a Roth IRA, you can withdraw your contributions anytime without penalty. You contributed $7,000? You can pull that $7,000 out whenever you want. Now the earnings on that money? Those are locked until you're 59 and a half. But that flexibility is still incredibly valuable. One more thing that gets people excited. There's no required minimum distribution. With a traditional IRA, the government forces you to start withdrawing money at a certain age, whether you want to or not. With a Roth, you never have to touch it if you don't want to. You can let it keep growing, and you can even pass it on to your heirs completely tax-free. That's generational wealth right there. Now, the obvious question, should you open one? If you're young and you have earned income, the answer is almost certainly yes. Time is your superpower here. The earlier you start, the more that compound interest works for you. Even if you can only contribute $1,000 a year, it's worth it. If you're older and haven't started, it's still worth it. You're not too late. The only real downside? You have to earn money to contribute. You can't open a Roth IRA if you don't have earned income from a job or self-employment. And if you're really high income, you might hit those limits we talked about. But for most people, this is a no-brainer. The bottom line, a Roth IRA is one of the most powerful tools available to build long-term wealth. The combination of tax-free growth, flexibility, and simplicity makes it perfect for beginners and essential for anyone serious about retirement. So here's what I want you to do. If you found this helpful, smash that like button. Subscribe to the channel because we drop videos on investing, retirement planning, and personal finance every single week. And drop a comment below telling me your biggest money question. Should you max out a Roth before investing in the stock market? Should you open a Roth or a 401k first? What's confusing you about retirement accounts? Let me know. Thanks for watching, and we'll see you in the next one. Disclaimer. This is not financial advice. Always consult a licensed financial advisor before making investment decisions.